So just a couple of things to keep in mind as we go through this. Yeah, we'll be looking again at the overall statistics that we're doing here. We're going to talk about the trades that worked. We're going to talk about the trades that we can learn something from. We'll talk about ones where something may have gone wrong and we don't want to change a trade plan from. So let's just take a look at the overall statistics first. And we'll go into a total of 20 trades that were offered up this week. That includes one that was put up last week and is and hit this week though. So total of 20 trades offered. We had 10 losses. We had 7 wins. That gives us a 41% win ratio. Not quite our target of 50%, but again, we only have to have a 25% win ratio in order to remain profitable. So 41% is very good. And the way that we figure that out, for every trade that we take, that's considered a 1 times risk loss. Our targets when they win those are 4 times risk. So the example that I like to use is if you risk $100 and you lose on a trade, you lose $100. If you win, you make $400. So with that 4-to-1 ratio there, basically all you need is a 25% win rate to continue to remain profitable. So let's go ahead and take a look at some of our areas that we want to look at overall for the week. And I'm going to start with our USD, Euro USD Forex trade that we put out. I think this one came out on Monday. I just want to show that here on the screen. I'll zoom in so you can get a better look of this. And so what we had here, right, we had our 15-minute short. And as you can see, price came very high up into the zone here. I'll make sure that can be seen. And so one of these things, the reason why I want to show this one is if you look at the entry that we had put in here, right? For the stop was 1.1352. And if I bring up my cursor here and hover it over this, the furthest highest up candle that we have here, we have the high shows is 1.13520. So price never hit our stop. So this trade worked. However, there are some accounts out there, some brokers that will show a little bit of I guess what we'll call slip in the price here. So I put this trade in on a couple of different Forex accounts that I have, and one of them, this trade here, stopped out. Even though price never hit my actual stop of, again here, the 1.1352, you know, the price came up to 1.1350. That the slip that they have in their platform did actually cause that trade to stop out. So that's just something to keep in mind, right? Especially if you're trading on a different platform that you're charting on. Just know that there can be differences in what that slippage is for each one of those brokerages. So just something to, again, to keep in mind. If that's something that you find happening often with the broker that you're using, that may be something you can either talk to them about or maybe even just switch brokers if it's not working for you. So just wanted to show that to you. Right, technically this trade worked, and we're noting it as it worked, as price never actually got to that point. And then of course, you know, price you did see come down here to our target line down below. But again, just something to keep in mind that the different brokers treat that slippage a little bit differently. Next, I want to look at our S&P 500 futures trade that we had that came up on Tuesday. So this is a really good example of something that just, I mean, honestly, I missed out on when we were doing this. So bring this one up here, and I don't have the lines drawn anymore, so I just put them back up here just so you can see what happened overall. So this was the trade we had that showed up on a 15-minute time frame here, and you can see our zone structure over here where we had a nice, you know, drop into a drop down, right, and then we had a leg up, a base candle, and then another leg out. So really good quality looking zone here, and we put that one in, and we took this as one of our trades, and you can see here, right, price did come down and stopped us out before it moved up. And I want to show you that same area on a 50,000 share bar chart. I think that was, yeah. So we'll look on a 50,000 share bar chart, and we're going to see here. So, and I left this one in to really help us out, to help us see what this looks like overall. So this is what the chart looked like when we put the trade out on Tuesday. And I talked about this a little bit of, there was, you know, this is the picture perfect zone that had a kind of a standard zone on the 15-minute chart. 50,000 share bar chart had this picture perfect zone. And I treated these candles, these leg out candles, identically. And when you really look into it and you zoom into it, you know, quite a bit, and I'll do it just one more time here so you can really see what I'm talking about. All right, this leg out candle here, the second one, is a little bit longer overall than this leg candle here, including the wicks. And so what I had said, because when I first time I looked at it, I was like, you know what, that's close enough to the same size where I'm going to treat it as if it was, you know, they were the same size. So I'm going to take all three trades. The reality is when you spend a little bit more time on it and you look at it, you can definitely see that there is a difference in the size of these candles. And so the rules for our picture perfect zone is that when that happens, you take the lower zone, not the upper one. And so looking back at this, what I realized here is I went through this a little too quickly. I didn't take my time, and so instead of choosing just the one single trade, which would have been this one here to take, I took all three of them. And as it was, so we lost on the 15-minute zone one we saw before. This one here was a stop, and then a stop out, so a loss, and then the bottom zone here was the win. Overall, we were profitable. So it wasn't, you know, it wasn't like this was a significant, you know, loss or, you know, something, you know, bad that was detrimental to us overall. We just could have done it better. And so what that tells me is that my rules are there for a reason, and in this case, I just didn't spend enough time to look at the actual zone to make sure that I was following my rules as explicitly as I should have. And so this is something that you can change, right? This isn't changing the trade plan. This is changing your behavior to make sure that you actually do spend a little bit more time looking at these when you have like 2 or 3 zones in a row. Take the time, look at them to find out really which one is the best one. We could have eliminated 2 of the losses that we had overall for this week by doing that, and drastically increased our overall profitability. Next, let's look at let's see the 10-year bonds on the futures. So I want to show another one here, and this was a 45-minute chart that we had, and we had a short set up on it. And I'll go ahead and show the whole entire thing here, right? So we had a really good looking zone over here, and it was a relatively small one, right? This is only 3 ticks on this chart, because these things tick at a 0.5, of a number. So this 128, 25.5, and you have 126, 126.5, and then 127. So it's a very small zone, very low risk. And as you can see, price actually came up and touched our stop. But in my case, it touched it, but my order was placed such that it didn't trigger the stop until it dropped down below. Somebody else taking this, if you placed it earlier on, or depending on what priority your trades have in the overall queue, you may have been stopped out of this one. And technically speaking, I should have as well. In this case, the trade worked. And in reality, right, the whole zone worked. So this area worked out very, very well. And as you can see, price is just dropping, substantially from there. But just want to talk about that too a little bit, just to let you know that just because you have a stop set somewhere, depending on the time and priority that your trade has, and depending on what broker you have, may or may not trigger those stops if it hits it like to the actual tick itself. So I'm not going to do anything different with my trade plan with this one, other than I note this in my trade tracker that my stop was set a little bit too close. So for the 10-year bonds, the TY symbol, I'll just have another note in here that I set the stop a little bit too short. And again, when I review this data about every 3 months, if I have multiple of those entries, then I can go about potentially changing my overall trade plan. But again, you don't want to change your trade plan just because of a single instance of something going wrong like that. Next, I want to talk about, I just want to show the platinum trade that we had. And the reason I want to show this is this isn't something that I typically trade. I don't actively watch it overall. And so kind of the point of this one is this process that we use, supply and demand zones, they work no matter what. You don't have to know something. You don't have to be familiar with something in order to understand that it works and that you can be successful doing it. And so in this case, again, I have traded platinum in the past. I've seen the past 3.5, 4 years, or actually almost 5 years now that I've been doing this. I've probably actively placed 1 or 2 platinum trades and probably drawn 10 to 15 zones total in it. And I haven't drawn one in probably a 1.5 or 2 here, but I think it was this one came up on Wednesday of this week, and there wasn't a lot of other zones out there in the standard areas that I typically track. So I looked at platinum, saw this area, it met the trade plan criteria, so I put it in, and sure enough, hit into the zone perfectly, came back out. You can see where I hit the target up here. So another 4-to-1 win on this one. Again, kind of just proving the point that when you use something like this, like a supply and demand process, where it's not dependent on the security or the symbol that you're trading, you can use it anywhere. It doesn't matter how much familiarity you have with it. And then let's go through the trades that we had today. So today was not, generally speaking, a good day. Fortunately, we had several wins earlier on in the week. And so we'll look at, so we had a crude oil trade here on the 3,000 share bar chart. And I want to talk about this one for a couple of reasons. Number one, it was just what we did today, so I want to follow up with you on that. And so you can see here, right, with our entry and the stop, we went right below it and lost in. So this one was a loss for us. And so I spent a little bit of time today looking at multiple different charts to see, okay, what did I miss? Like, did I miss anything? Was there any other zone below this that I should have seen? Was another one up above here that I didn't think was going to work either. And so I didn't use that one, but just put this one in. I was like, you know what? Chances are with two zones stacked on top of each other like that, one of them is going to work. The bottom one looked the better to me, and I couldn't find anything. So this is one where you might look at it and go, I mean, like when you see how far price moved out of here, obviously you want to try and take advantage of that. You want to look at that and go, man, I wish I would have found the entry point for this to take advantage of that trade. And I looked around and there was nothing there. So this is one, again, you don't want to change your trade plan. You don't want to, just feel you did something wrong. You got to look for it and see if there's any data to back it up. In this case, there wasn't. So again, we just get it wrong. We continue on with the trade plan overall. Next, we had a copper 240-minute zone. Let's see here. Pull it up. It takes a little bit of time to load some of this data. I've got a lot of it in my cache right now. Probably one of the things I need to do. And if any of you are running TradeStation platforms out there, just keep that in mind. If your platform is acting slow at all, you can clean the cache out. Look on the TradeStation website for instructions on how to do that. But that can dramatically improve your performance if things start slowing down. So we had this zone here. And as you see, I'll zoom in just a little bit more here so you can really see it in closer detail. All right, price came down and just barely wicked out of it, and came back up out, but hasn't had a dramatic move out of here yet. So this is one where I won't even log this trade yet to track the zone, because I need to know if price continues to move up and would have hit my target. Then I can fill this out and put my reason for loss that I had, the stop set too close. But if price doesn't come to hit the target up here and just continues down through it, then I know it's just a loss because the zone didn't work at all. So just wanted to show that again, just to close out what happened today for this one. And the only other trade that we had on today was the Ethereum trade, and that one, it was a daily zone, and price didn't really even come close to it. I wasn't sure if there was going to be a fair amount of volatility in the crypto markets today. So wanted to just make sure we had that trade in, ready to go. If you are curious about it, make sure you look at the video from this morning. It is a very, very solid zone there, and one that I would highly, recommend looking at. And if it fits your trade plan, make sure you do take that. I want to show a couple of other things that I just missed this week, and want to show you what they were and then give you the reasons for them. Right, so we had a couple of trades put on for NK. Actually, I do want to show that. Sorry. So this is one that we had set in the 15-minute time frame. I put this one in early last week. Right, so this one was put in on the 6th, or maybe even the 7th. It was probably put in on the 7th. And one of the things that I do when I'm putting in trades like this, typically speaking, I will monitor them, even though you see this one was 1, 2, 3, hit 4 days later on a 15-minute zone. One of the things is I'll just point out, this is I made a mistake here, so you can learn from it. Make sure that when you put trades in, you monitor them day over day to see if any of the conditions change. So one of the things that I always do is trades have to be with the trend. And so I have to monitor the trend state each day to know if trend changes, then I know I need to take that trade off of the table. And one of the things I did here was I looked at this chart later on in the week and thought that the trend had changed and pulled this trade out. And that was a mistake on my part. I should have left it in because the trend didn't change. It was still a downtrend. And so you can see even 4 days later, price came up, it missed the first one, so that counts as a loss. But the second zone right here, again, hit very, very well. It perfectly actually came in, hit here, came down, didn't quite hit our target, came back up into the zone again. I'll remove this one just so that there is less confusion. This is what I'm talking about, right? It hit here and then just came down, hit our target, and just kept moving down, further and further from there. this would have been one of the ones where, again, I'll track this to show how far price actually moved here to see if there's a chance later on that we can update our trade plans, that we know when to take trades that are more than just a 4-to-1 profit ratio, that we can take advantage of these much bigger moves here. So just want to show that even though a trade has been on the books for a couple of days, doesn't mean that you ignore it, and just monitor the trend. And again, make sure that you do pay attention, rate it accurately. So if the trend doesn't change, you keep those trades on and take advantage of them when they do hit. And I want to show one here on the 180-minute chart. And this is one that I didn't put out there. And honestly, I think on the day that this hit, I just got a little too busy. But I want to show this formation because it's something that I've looked at for a couple of years now, and I just want to kind of walk through what this looks like. So this is a picture perfect zone, right, where we have two zones stacked on top of each other. And in this case, you actually have three zones stacked on top of each other. And one of the things that I have found is that when that happens, usually it's one of the three zones, I think, works like, I don't have the data right in front of me, but it's like in the high 90% of the time. And so it's very useful to take all three of them. And in a lot of cases, two of them work. So you'll see here the first one here worked out very well, hit our target, then came down, blew through the second zone that was right here, right, but then came into the third one. And that one, as you can see over here, right, worked out very, very well. What came up, hit our target, and then kept dropping down. And this is now turned into a support area, right, where price just can't get down through. But overall, I just wanted to let you know. So this is one of the reasons why you'll see in one of our educational videos where I talk about starting small, starting simple, because if you're monitoring too many things at once, you can sometimes forget things. And so that's the case with me every once in a while. Is I track so many things, just to kind of give you an idea, right? All of the stuff you see over here on the right, I'm tracking most of this stuff every single day right now. And honestly, I've probably gotten to the point now where I may have to revisit that and see, if I miss too many other trades, like we saw here on the 120 or 180 minute chart, then I need to go back and relook and maybe simplify some things. And the way that you do that, by the way, is part of your zone tracking or trade tracking, depending on which one you're doing. Effort, you're going to put in the reason why a trade wasn't taken. I put in missed. So if I see that, every week when I review things, if I see, I got 5, 6, 7 misses, that's a problem, right? But that points me to an area that I know I need to work on. And the easiest way to work on something like misses is to simplify your trading and to pare down the amount of things that you're actually looking at, so that you can spend the time and energy and effort that you need on looking at the ones that really do matter. But in this case, something that I had already drawn out and just didn't get back around to in time to actually put the trade in. Again, if I would have done that, we would have been a little bit more profitable for this week, and so that's the overall goal here. So that's really it for the analysis this week. Just a couple of things that are coming up. First of all, we did get the permissions set correctly on our Patreon site. So when we have additional trades throughout the day, you should see those posted there and be able to take advantage of them. We're working on a couple of other things right now. One of those is being the overall tracker for all of this data that we're putting out every day. That'll be available on the Patreon site as well. So be able to take a look at this of day-to-day activities, how we're doing, week-over-week performance, things like that. Working on a few reaction videos right now, and of course the next segment in our educational video that should be coming out in the next week or two about how we track trades themselves versus how we're just tracking the zones. So with that, thanks again for supporting the channel. Make sure you hit the like button if you found this useful. Subscribe to the channel so that you can get notifications when our new content comes out. And have a great weekend, and look forward to seeing everyone at Monday for another set of trades throughout the week, every single day. And again, we'll see you all again next Friday too for a live session to review our weekly performance. Have a great weekend.